today's video we're going to talk about the different types of orders that futures traders use. Market orders, limit orders, stop orders, that kind of thing. We'll also talk a little bit about algorithmic orders, and maybe if you guys find that topic interesting I can do another longer video on algos. But anyhow, this video is part of a series about financial derivatives. If you're interested in that topic, you might find some of my other videos interesting. So, types of orders in futures market. The first order we're going to talk about is the simplest order, and it's called a market order. And this is simply an order to a broker to buy or sell at whatever the going market price is for the underlying. The next order type is probably the one that's most popular with traders, and that's a limit order. A limit order is an order to buy at no more than a specific price or to sell at no less than a specific price. Limit orders are used when the trader wishes to control the price rather than the certainty of execution. So with a market order, you're guaranteed to get a fill, you're guaranteed to execute that trade, you're just not sure of the price. You might worry that you'll get a bad price in a fast moving market. With the limit order, you're not sure that you'll get filled, but you've got some control over what prices you deem acceptable or not. So a limit order gives the trader control over the price at which the trade is executed, but the order may never actually be executed. Our next order that we're going to look at is called a stop order, and often people call this a stop loss order as well. It's an order to buy or sell once the price reaches a specified level, which is known as the stop price. So when the stop price is reached, a stop order becomes a market order. A buy stop order is entered at the stop price above the current market price. A sell stop order is entered at the stop price below the current market price. Investors generally use a buy stop order to limit a loss or to protect a profit on something that they have sold short. Investors generally use a sell stop in order to limit a loss or to protect a profit on something that they own. Certain exchanges have stopped offering stop order types. In 2016, the New York Stock Exchange plans to no longer accept stop orders and good till cancel orders. The reason they give is that many retail investors use stop orders as a potential method of protection, but don't fully understand the risk profile associated with the order type. We expect our elimination of stop orders will help raise awareness around the potential risks during volatile trading, is what the New York Stock Exchange say. Brokerage firms may still offer these types of orders to customers and execute them through in-house algorithms, but the orders will no longer be available directly from the exchange. The next order type that we'll talk about is called a stop limit order, and this is obviously very similar to a stop order. It's an order that combines the features of a stop order and a limit order. So once the stop price is reached, the stop limit order becomes a limit order to buy or to sell at no more or less than another pre-specified limit price. As with all limit orders, a stop limit order doesn't get filled if the securities price never reaches the specified limit price. So that is a stop limit order. The next order type we'll talk about is a market if touched order, and that's an order to trade at the best available price if the market price first goes to the if touched level. As soon as this trigger price is touched, the order becomes a market order. Lastly, we'll talk about a discretionary, or it's also known as a market not held order. And that's an order that uses the broker's discretion to try and get the best price they can. Hopefully you found this video helpful. Later I'll put up a video on algorithmic order types if enough people are interested. Let me know in the comment section below if you'd like to see that. These videos are all based on my book, Trading and Pricing Financial Derivatives, which is available on Amazon.com. And if you're interested in that, take a look for the link in the description below. If you found this video helpful, please hit the like button. If you'd like to see more of them, hit the subscribe button. Have a great day, and hopefully I'll see you later. Bye.